Your money, your stories, your freedom. The Peter Schiff Show.
Welcome, everybody. This is Peter Schiff here at SchiffRadio.com. We're taking your calls again, 855-4SCHIFF, 855-4SCHIFF for most of the next 2 hours. So if you want to participate in the show, give us a call. Looking at the markets right now, half hour into the trading day. Again, we're getting this volatility. The Dow is up better than 100 points, almost 120 points. They're buying stocks today, which means they're selling gold. And gold is down about $23 an ounce. Silver, though, is hanging into about unchanged level. And, the gold stocks, which had a pretty good day yesterday, are down a bit today. But, again, they're not down as much as gold. Gold down 1.3%. The index of gold stocks down 0.7%. So, again, the gold stocks catching up a little bit, which is something I believe is going to continue. The economic news out thus far this morning was the ADP jobs numbers. These numbers come out every Wednesday when there is a monthly job number coming out. And the first Friday of every month, we get the jobs report. So on Friday, we were going to get the official jobs numbers for the month of August. But the ADP number came out, and it showed companies hired 91,000 people during the month of August. That was a little shy of what analysts have been looking for, maybe about 100,000 jobs. So I guess the weaker than expected job numbers gave a lift to the market because, again, any weak economic data is more justification for the Fed to print more money, QE3, to try to artificially stimulate the economy. So what the market celebrates when we get weak economic data is the fact that we're going to get more inflation. And if there's going to be more inflation, if money is going to lose value, well, then obviously the price of stuff like stocks is going to have to rise to reflect the fact that the money that you use to buy that stuff is losing value. Across the pond, we got jobs data in Germany. The unemployment rate in Germany is now fallen for 26 consecutive months. It's at 7%, which is historically actually a low jobless rate. And the German jobless figure is a lot more accurate than the U.S., the way they compute it. But that 7% figure is the lowest rate of unemployment in Germany since 1991. Now, we're criticizing Germany because they're not stimulating enough, right? Germany is embracing more of an austerity type of plan. They have raised interest rates up to 1.5%. They've been on pause for a while, but at least their rates are higher. They haven't been doing the quantitative easing like we have, and we've criticized Germany. The U.S. government has criticized them for their lack of stimulus, yet unemployment is at the lowest level since 1991. We've got the highest rate of unemployment pretty much since the Great Depression, yet we're criticizing Germany. I mean, shouldn't the shoe be on the other foot? Maybe they should be criticizing us because obviously the stimulus is not working. Now, of course, Ben Bernanke doesn't understand that. He thinks that QE2 works. That's what I've heard. I mean, he's so convinced that QE2 worked that we're going to have QE3. But, I mean, why doesn't it dawn on him that if QE2 worked, we wouldn't need QE3? In fact, the reason that he's doing QE3 is because QE2 failed. It didn't revive the economy, so they're going to try it again. But rather than learning from their mistakes, they simply repeat them. You see, what the Federal Reserve has to understand is that cheap money is not the solution to our problems. Cheap money is the source of our problems. But, why does Ben Bernanke think that QE2 worked? Well, because briefly we had an uptick in GDP because of QE2. Yes, of course. It's just like, if a heroin addict decides to take more heroin, yeah, it feels good, right? I guess that's what they say anyway, that, you take a little, a drug addict uses drugs. He likes it. That's why you do drugs, because it feels good when you do them. The problem is it doesn't feel so good when you stop. And that's what happened. I mean, our economy is addicted to consumer debt finance consumption, whether it's government, whether it's individuals. We're borrowing money to consume. The problem is when you spend money, it feels good. Everybody likes to spend money because you get all kinds of stuff when you spend money. Spending money is fun, and the GDP goes up a little bit. But the problem is then the stimulus wears off, and now you realize, wait a minute, I bought stuff I couldn't afford. I'm deeper in debt now than I was before, and now the hangover sets in from the stimulus. Doesn't feel so good anymore. And see what Ben Bernanke wants? He wants to feel good again. Right? He wants the high that you get from spending borrowed money. He doesn't want to go through the difficult process of withdrawal to correct all the imbalances that underlie our economy, because that's not fun. That doesn't feel good. It works, but he's of the mentality, if it feels good, do it. And so he wants more spending. So, yes, did QE2 work? Well, only if you believe that using more heroin is a good way to kick a drug habit. I mean, if somebody is in a rehab, does it feel better if they interrupt the rehab and they just shoot up with some more heroin? Yeah, temporarily, that's a lot better than the alternative, but it interrupts the entire process. It screws it up. It makes it harder. And we're having a recession. The recession is unfortunately necessary to purge the economy of all the malinvestments that were built up because of years and years of cheap money, of interest rates being too low. We built up an economy of unsustainable asset allocation, too much consumption, not enough production, too much borrowing, not enough savings, too much government, too much regulating, and not enough industry. And all these things have to be resolved. And it doesn't, there's some pain involved in that process, but there's a lot of light at the end of the tunnel. But Ben Bernanke, refuses to allow this to happen, and so we're going to have a QE3, which means, unfortunately, we'll have a QE4, which means we'll have a QE5. We're going to continue to have QE until the Fed realizes that the reason the economy is suffering is because of their cheap money. Now, some people might say, well, how can that be? Because the quantitative easing didn't start until after the financial crisis. No, it started before. It started, quantitative easing happened in 2001 and 2002. They just didn't call it that. They brought interest rates down to 1%. The Fed was stimulating. That's why we had a housing bubble. And the housing bubble burst because the government inflated it. And why did the government inflate the housing bubble? Because the stock market bubble burst. Well, why did we have a stock market bubble? Because the Fed inflated that. So we just simply go from bubble to bubble. We keep on stimulating, and the Fed keeps on thinking that the way to put out the fire is by more gasoline. Speaking about the Fed, one of the people, this guy, and I'm probably pronouncing his name wrong. This guy's name is Coach Lakota. Maybe I got it right, but he is the president of the Minneapolis Federal Reserve. He is one of the three dissenters the last time the FOMC met who was against keeping interest rates at 1% for a 2-year period of time. So he dissented, and now he's basically backtracking. I'm gonna talk about that after the break. So stick around. You got a lot more of the Peter Schiff Show coming up. So stay right there. Schiff here at SchiffRadio.com. I didn't realize that I was back on with that music. Normally they play some type of introduction to let me know that the segment has begun. I don't know, maybe this is some new format that I am not familiar with. But anyway, before the break, we were talking about this dissenter, Coach Lakota, who is one of the three guys who was on the FOMC meeting who voted against keeping interest rates at zero for another 2 years. So he was one of the I guess you'd call them the hawks now. They've really dumbed down what it means to be a hawk. So now you're a hawk if you don't want to keep interest rates at zero for 2 years. They really lowered the bar. I don't think there's any hawks. It's just a degree of dovishness there. Who is the bigger dove? But there were three guys that at least had some modicum of integrity that decided to dissent. But apparently, they had a cool hand Luke moment with this guy, Coach Lakota. They took him behind the woods somehow, and they got his mind right, because he came out and said that even though he dissented the last time, that he's not going to do it again, and he's now on board with the decision that yes, he registered his protest, but now he feels it would be counterproductive if he didn't, show his support for the policy, that it somehow might undermine the Fed. I don't understand. If he thinks it's a bad idea, why would he want to support it? Why wouldn't he want to undermine it? What's the point of dissenting if the minute you dissent and then you say, well, yeah, I disagree with it, but but I don't want to, to have everything uniform, for camaraderie. I'm just going to support the policy anyway, even though I think it's a bad idea. And in fact, it's more than a bad idea. It's helping to destroy the currency. It's helping to destroy the economy. If he actually believes that the Fed shouldn't be doing it, he should be digging in his heels. He shouldn't be caving in. He should be coming back stronger than ever, dissenting more and more. It's kind of like, at a jury. It's like, imagine if there was a jury trial and there's a guy that thought the murderer, the accused murderer was innocent. And, came back and there was, 11 people said guilty and this one guy said, no, I think the guy's innocent. And then after the first vote, he just said, well, everybody else thinks he's guilty. I'm just going to cave in. I'm just going to join the majority. I'm just going to vote guilty, too. I mean, if you really believe that the guy is innocent, why do you want to send him to the gas chamber or something? Wouldn't you try to convince the other members of the jury one by one? Wouldn't you try to make your case and make your point, defend your position? I mean, that's why we have 12 jurors, because maybe, they don't all think the same way. And the people who have one opinion, you're supposed to have an argument. And then maybe you try to convince other people, or maybe they win you over. But you don't simply cave in just because the majority thinks one way. I mean, if the Coach of Lakota really thinks that keeping interest rates at zero for another 2 years is a bad idea, I want him to argue that point. I want him to continue to make that point. I don't want him to just fall lockstep, behind the majority in uniformity, because he doesn't want to undermine what the Fed is doing. But if what the Fed is doing is wrong, he's got to undermine it. Somebody's got to undermine it, because what the Fed is doing is undermining the country. Talk about undermining something. I've got a sound clip here from President Obama. And again, it's amazing that all he wants to talk about is jobs. We got to create jobs. But what is the president proposing right now? He wants to give employees another way to sue their employers if they don't like the hiring process. So what Obama wants to do is he wants to make hiring people riskier. He wants to expose employers to another way to get sued based on the way they go about hiring people. Now, if you want people to hire people, the last thing you would want to do is make the hiring process riskier and more costly. The last thing that you would want to do is basically warn all potential employers, you better be careful, because the next time you hire somebody, there's a good chance or a better chance that you might get a lawsuit for your efforts. I mean, and who is this new protected class that Obama wants to protect? Ironically, it's the unemployed. It's the people who most need a job. And he is going to punish employers, theoretically, because he wants to protect the unemployed. And these are the people who have the most to lose by employers who don't want to hire. But anyway, let me play this clip. It's clip number 3.
Now, these folks so far have not been, very responsive to public opinion, and which is why they are very unpopular right now. But they're speaking only to a very narrow segment of the population, their base. We've just got to keep on putting the pressure on. My attitude is that my job is to present the best plans possible. Congress needs to act. If Congress does not act, then I'm going to be going on the road and talking to folks. And this next election, very well may end up being a referendum on whose vision of America is better.
Yeah, obviously I played the wrong clip there, but I can comment a little bit on what Obama was saying in this speech, because he was talking about the Republicans and why they're obstructing everything he's doing. And it's, of course, it's not saying because what he's trying to do is bad and obstructing it is good, because we want obstructions when the president is trying to harm the economy. But he is talking about the Republicans and saying that they're speaking to this very narrow part of their base, assuming like only a very small percentage of the Republicans actually oppose what Obama wants to do, and the rest of the Republicans actually embrace Obamonomics, but it's just this small little fringe, this narrow part of his base that doesn't like it. I mean, the opposition is a lot deeper than Obama thinks. It's not just a small part of the Republican Party that is opposed to big government, that wants government to spend less. I mean, there certainly probably is a majority in the Republican Party that wants less government. After all, that's why they are Republicans and not Democrats. If they wanted more government, they'd be Democrats. But anyway, let me go to the cut I wanted to play about President Obama, again, trying to escalate the war on employers, trying to make it that much riskier and that much costly to employ people so that fewer people will decide to take a chance and hire somebody. But here it is, cut number 4.
There's no doubt that folks who've been unemployed longer than 6 months have a tougher time getting back into the job market. Now, the single most important thing we can do is just have the economy strong, so that employers aren't as choosy because they've got to hire because their businesses are expanding. But we have seen instances in which employers are explicitly saying we don't want to take a look at folks who've been unemployed. Well, that makes absolutely no sense. And I know there's legislation that I'm supportive of that says you cannot discriminate against folks because they've been unemployed, particularly when you've seen so many folks who, through no fault of their own, ended up being laid off because of the difficulties of this recession.
Now, first of all, Obama says it makes no sense to want to hire people who have not been unemployed for a long period of time. Well, maybe it makes no sense to Obama because he's never actually hired anybody. In fact, I don't even know if he's ever actually been hired. I don't know if he's ever actually had a job, let alone created one. But obviously, if a businessman makes a decision that he only wants to interview people who are employed or have been unemployed for a short period of time, obviously he thinks that's an important criteria, because otherwise he wouldn't have it. He wouldn't eliminate a whole pool of applicants if he didn't see a reason for it. After all, the employer is trying to make the best hire he can because he's trying to make money for himself, and so he's trying to hire people who he thinks are best able to help him make money. And so if he wants to make that judgment, it's his call. It's not Obama's call. It's not the government's call. But the damage is going to go way beyond that. And I'm going to pick up this discussion on the other side of this break. So stick around. I will take your calls. We've got a few people on hold, so don't go away. You're listening to the Peter Schiff Show. And we are back. And, before the break, again, I was talking about President Obama's deciding that he needs to protect the unemployed from discrimination in the employment based on their unemployment. Obviously, and there are reasons that employers might prefer somebody whose job skills aren't rusty, maybe somebody who's been unemployed for a year or two. People might think that they're a little bit out of touch. They're not going to be as conscientious. And maybe some employers think, look, I want a go-getter. I don't want a guy that sits around and collects unemployment. I want someone that's out there. I want someone that takes a job, even if it's even if it's a job that seems beneath them. I mean, personally, you're hiring somebody. Let's say 2 people lost a job, and one person's been unemployed, and another person's got 2 part-time jobs, even if they're menial jobs, but they're working in, someplace just to be out there, just to make a buck. And you might think, hey, that person's got more on the ball. He's more of a go-getter. I want somebody like that. I want somebody that doesn't just, remain idle, that takes whatever they can get and tries to improve themselves. But beyond that, beyond whatever the merits are, as far as employers preferring people that haven't been out of the labor force for a long period of time, what is the impact if Congress is going to pass a law saying that it is against the law to discriminate against people who have been unemployed for whatever 6 months or a year, and now there is a penalty imposed on employers who discriminate, and the employee who feels he was discriminated against can sue the employer and be compensated damages, and of course impose large legal fees on employers now who have to defend themselves against discrimination-based lawsuits brought by the unemployed who are claiming that they were denied a job simply due to the fact that they were unemployed too long. Now, so what does an employer want to do, especially in this economy? Times are tough, money is scarce. If you're worried about potentially getting sued by a job applicant because that you didn't hire him, what would you do? Now, obviously, overtly now, with this law, you can't run an ad that says don't apply for a job if you've been unemployed for more than 6 months or more than a year, even if basically you don't want to interview people who have been unemployed for more than a year. You have to allow them to send you, you can't say that, so people are going to send you resumes anyway. But even if there's a particular resume that you might like, are you going to call them in for an interview? I mean, maybe there probably are some people that don't even care whether or not you've been unemployed for a year or 2 years or 3 years, who aren't discriminating right now based on unemployment, who might start discriminating based on unemployment because of this law. Because here, I'm a small employer, and I get some job applications in, and I get a couple of applicants who have been unemployed for a long period of time. Now, do I really want to call these guys in for an interview? Because what if I call them in for an interview and then they don't get the job and then they try to file a lawsuit? I mean, probably if I just ignore their application altogether and don't even call them in for an interview, I'm probably a lot less likely to get sued if I don't hire them. So basically what might happen is, as a result of this law, nobody who's been unemployed for a long period of time is even going to get a shot at a job, because why give somebody a shot? Because then if you don't hire them, you open yourself up to a lawsuit. And of course, even if it's a frivolous lawsuit, you got to defend it. You might have to settle it. And of course, the easiest thing to do is sue your employer, because there are all these contingency lawyers out there. You never even have to pay the lawyer. Lawyers take these cases on contingency when you sue employers. And the way a lot of the state labor laws are written, they're skewed to protect the employee and against the employer. And oftentimes the employee can recoup all of his legal costs against the employer, which he doesn't even pay. But if you sue your employer and the employer wins, he's legally barred from collecting his legal fees. So he's stuck with the legal fees no matter what, which means a lot of employers are forced to settle frivolous lawsuits because the cost of settling is cheaper than litigating and winning. But of course, why would you want to expose yourself to this risk? So if this law is passed, the people who are going to be most affected are going to be the long-term unemployed, who are now going to have an even more difficult time getting a job because nobody is going to even interview them for fear of a retaliatory lawsuit. And, of course, some people might respond to this. Some employers might just say, I'm not even going to hire anybody. I mean, I was thinking about hiring somebody, but, I mean, it's just another way I might get sued. Why take the risk? I'm just going to outsource this job. I'm going to hire somebody in India, or I'll get a temp, or maybe I'll do something else. I'll try to avoid hiring, because the riskier the government makes it, the more penalties, the more the government tries to punish people for hiring, the less likely it is that anybody's going to hire or that people are going to want to hire. And this is the attitude in Washington. And this is the kind of stuff, when I testify in front of Congress in a couple of weeks, this is the kind of stuff I'm going to talk about, all of the ways, all the things that the government does to destroy jobs. Because you do not create jobs by punishing, by regulating, by fining, by taxing, and litigating against the people who create the jobs. Because jobs only come into existence because employers want to make a profit. That's the only reason they hire people, is to make more money for themselves. And if you make that more difficult, if you actually change it so that, hey, hire somebody, you might lose money because you're going to get sued, then you just don't do it. It's not people don't create jobs out of charity. It's not altruism. It's self-interest. Employers are trying to make money for themselves. And if they can't make money for themselves by hiring people, they won't hire people. And of course, in order to hire people, you need capital, you need tools, you need equipment. And where does that come from? That comes from savings. And if you tax the job creators so they don't have as much savings, they can't afford the equipment, they can't afford the tools. And if you don't have tools and equipment, you can't hire somebody, because what are you going to, they need stuff. That's why most people take a job. They don't have their own tools. They don't have their own capital. So they need somebody who has those things so that they can work for them. But if you make it harder to accumulate those things, you make it harder to employ. Anyway, let me go to the phones. We got a number of people who've been waiting on hold. First up is Carl calling from, is that Fort Myers, Florida? Carl, welcome to the show. Carl, can you hear me? Don't know what happened. We were having these problems yesterday with some of the callers. I don't know if maybe some of them can't tell that I'm calling their name or what the problem is. But let me go to Casper. I'm not really sure where he's calling from. Casper, welcome to the show. Can Casper hear me?
I can hear you loud and clear. Can you hear me?
Yes, you're on.
Schiff, can you hear me?
Go ahead. Yes,
Excellent.
I can.
Thanks for taking my call. First a comment and then a question. First, I like your focus on the Obama job creation issues, because every time I hear these politicians saying that they want to create these jobs and those jobs, who the hell do they think they are? I mean, since when did the president become sort of the job creator? I mean, can we not see that
presidents always want to talk about. Yeah, presidents, and I understand you're calling all the way from Malaysia, so thanks for staying up late and listening to the show. But, presidents always want to talk about creating jobs, because that's what the unemployed want, is they want a job. And so Congress wants to, the president wants to be Santa Claus and put a job in their Christmas stocking. But, of course, that's not where jobs come from. They don't come from Santa Claus. As I said, jobs come from employers trying to enrich themselves, and they think that by hiring somebody else, they can make more money for themselves. That's where jobs come from. So you need profit, you need capital, and none of these things come from government. In fact, all of these things are inhibited. Government prevents all of this. And yet all they want to talk about is suing, is trying to find ways to create special privileges for employees, which means that you impose special obligations on employers. So the minute you choose to be an employer, you lose a lot of individual rights. All of a sudden, you're saddled with liabilities and responsibilities. So more and more people say, you know what? I don't want to be an employer. I don't want all those liabilities. I don't want those responsibilities. So I'm just going to find a way not to hire anybody. And I have met a lot of small business people who are self-employed, and all they can tell me is, I have no employees and I love it, and I'm going to keep it that way, and I don't want the headaches and I don't want the hassles. Well, all the headaches and the hassles come from government. Because if you could just hire somebody and fire them if they don't work out, if you had no worries about being sued based on the workplace environment or based on discrimination, if you didn't have all these taxes associated with employment and unemployment and workman's comp and mandatory leave, and if you didn't have all this hassle, if you could just hire people the way my grandfather hired people, then there would be no headaches, there would be no aggravation. Everybody, there'd be a lot more people getting jobs.
Yeah, I think it's a shame that the Republicans are not giving up that frenzy and talking about all that job creation. I really think it's misplaced that Washington should talk so much about the job creation, and the Republicans at least should admit it's just a matter of getting out of the way and let the market sort it out. Anyway, Mr. Schiff, I have a question regarding Switzerland. You have brought up a number of times that people don't seem to understand why a strong, in this case, Swiss franc is a good thing versus a bad thing, right?
Well, I think it's a good thing, and they try to portray it as a bad thing.
Yes, absolutely, and I meet a lot of people who think that it is a bad thing. I'm absolutely in your camp. I think it's an excellent thing, and I've been thinking a lot of the last weeks. Why is it that it's so difficult for people to understand that it is a good thing? And the conclusion that I have reached, and I wanted to ask you whether you think this is a valid conclusion or not, is that the modern society, in particular in Europe, is so static these days. Unions and salaries and everything is locked down for 2, 3, 4, 5 years. And if you have a strong franc, as they have in Switzerland, I could see right now on Bloomberg that it was down to 80 for the dollar. If they have a strong Swiss franc, you need to adjust salaries. You need to adjust for those fixed costs that your labor force has now.
Well, not necessarily, because remember,
they can't do it.
When you have a strong currency, a lot of your costs are falling. Your raw material costs, your imported component costs, your capital costs are going down. So you can afford to pay higher wages when you have a strong currency, because the strong currency is bringing down other production costs, and so you stay competitive. And if you look historically, look at countries that have had strong currencies. They've had trade surpluses. They've had strong economies. They go hand in hand. Switzerland is having a good balance of trade. Part of the problem is that if a company lays somebody off in an environment of a strengthening currency, they'll blame the layoff on the strong currency. That's not really why it's happening, but it's something that's easy to blame it on, and then the politician seize on that. I mean, certainly certain exporters think that a weak currency helps them, but it doesn't. I'll get back on this, so stick around. Don't go away. We'll continue this call after this break. Welcome back, everybody. This is Peter Schiff, and on the line with me now is Casper from Malaysia, and we're talking about currency. You know, the whole idea behind a cheapening currency enabling you to export more, I mean, anybody can sell more stuff if they cut their prices, and that's basically what a weaker currency is. It's like putting your merchandise on sale. But by just slashing your prices, it doesn't mean it's more profitable. The whole idea is to sell for full retail and make more profits, not just give your merchandise away. You know, I could give you an easy numeric example. You know, let's assume that the Swiss franc and the euro were at a rate of 1-to-1. And then let's assume an exporter is earning 1 million Swiss francs selling products to Europe. And now the Swiss franc goes up by 20% in value. But as a result, let's say that now this company is only earning 900,000 Swiss francs. It's not selling as much stuff because the prices are higher. So its earnings have gone down by 10%. So now it's only earning 900,000 Swiss francs. Now, the media might say, or the comments might say, oh, this is terrible. Earnings are down. We're only earning 900,000 Swiss francs. But they're not earning 900,000 Swiss francs. They're earning 1.1 million euros. They're earning 100,000 euros more because of the higher exchange rate. And so because they're earning more euros for their exports, they can now buy more products in Europe. And so they've earned more. They have improved their balance of trade. Because people forget that there's only one reason to export, and that's to import something else. You export some products to import other products. And the idea is to earn as much as possible from your exports. And if a strong currency means that you earn more of your competitor's currency in exchange for your exports, you win. It's a positive for that nation because they don't have to work as hard to consume more. You follow me?
Yes, I can follow you, but I also think, Peter, because, you know, I'm a strong believer in a strong currency, and I think this is an upside to the Swiss economy. But I think the reasons why people are finding it so difficult to understand how a strong currency can be an advantage is because that some of our other costs are so terribly locked down. Because if you are, let's say that you work at a Rolex watchmaker, and they sell a Rolex for $10,000 and 2,000 that was stainless steel, but now, you know, it's only 1,000 franc because the franc is more powerful when they're buying stainless steel. That's the easy one to comprehend. But what is the more difficult part is that, let's say the labor of that watch is another 2,000 franc, and that labor needs to be adjusted as well if you want to stay competitive, and that is very, very difficult in this inflation environment.
Even if you buy the argument, even if you buy the argument that I would tell my Swiss worker, hey, we're going to reduce your pay by 5% because of the stronger Swiss franc. If the Swiss franc has gained 20% in value, even though he's earning less francs, he's better off because the food he's buying is costing less. The gasoline he's buying, all the imported, all the consumer electronics, all the automobiles the car prices are coming down. Prices are coming down for people, and so it's better. But all you have to do is look. I mean, look at countries like Japan. Look at the big increase in the value of the yen from during the 1970s and the 1980s, when it went from 360 yen to the dollar to about 120 or 150. The Japanese economy was thriving while its currency was appreciating. It wasn't until the Japanese government tried to stop his currency from going up and has kept it kind of sideways for the last decade that Japan had all these problems. They did great with an appreciating currency. They're not doing well with a stagnant currency.
Do you think the Swiss,
let me.
If the Swiss franc stays where it is now, do you think you'll see salaries gradually coming down in order to offset that improves their buying power?
No, I couldn't hear what you're saying. But the Swiss franc, look, a lot of people send their money to Switzerland because they want to keep it in Swiss francs. The Swiss have a huge industry in asset management and banking, and a strong currency is a big plus. I mean, if the Swiss franc was a weak currency, nobody would want to save it. The fact that it's a strong currency, people want to save it, and that means that Swiss has more capital, that you have money flowing into the country instead of trying to flee the country. But anyway, thank you for the call. I want to see if I can move on. Another call, another topic. Herman is on the line from Queens, New York. Herman, welcome to the show.
Yes, Peter, can you hear me?
Yes.
All right. I just have a quick question as far as employee-employer relationship goes. And I agree with you that, no one has a right to a wage or no one has a right to, a job or anything of that nature. But by the same token, I want to be intellectually honest with you and tell you that I disagree, with a lot of times the things you say about, employers because, I've had I'm only 25 years old, but I've had about 15 jobs. And I've noticed that, almost no matter how hard you've worked, your raise was never commensurate with how much you produced or how hard you worked or how much sweat came off your brow. I agree. Yes, no employee. You don't have a right to it. You sign the paperwork saying that this is what it's going to be. But even during the boom years, I worked for corporations and whatnot, and the profit margins were
a lot of people resent the fact that they think they're underpaid. I mean, most employees think they're underpaid. I mean, I've never met an employee that'll say, "Yeah, I think I'm being paid too much. I'm overpaid." Everybody thinks they're underpaid. Everybody thinks the boss is making too much. But the reality is, if you're really underpaid, then somebody other employer is going to come around and offer you a better job at higher pay. And if you're really so underpaid, then the other thing you can do is go out and work for yourself. Quit your job and work on your own. If your labor is being underappreciated, if you're really delivering so much value to your employer, then why enrich your employer? Just enrich yourself. Go out and start your own business. But the fact of the matter is, most people who think they're underpaid can't get a better job, and if they worked for themselves, they would earn even less. So the truth of the matter is, they're probably fairly paid, or they wouldn't have their job. So I think there's a natural resentment. But if you're 25 and you want to find jobs, you need people to hire you, and you have to deliver value. And the person who hires you has to make a profit off of you. Otherwise, why would they do it? So they got to underpay you a little bit, because if they pay you more than you're worth, then they're not going to hire you. But anyway, I'd like to talk about this a little longer, but we are coming into a break, and we've got a guest coming up, the CEO of Gibson Guitar. We talked about it yesterday. Henry Jersiewicz is going to talk about his run-in with the Department of Justice, talk about destroying job creators. It's going to be an interesting interview, so stick around. We'll be Welcome back, everybody. This is Peter Schiff here at SchiffRadio.com. Hour 2 of the show is underway, and my guest, Henry Jersiewicz, apparently there was a bit of a screw-up. He's on at 11 o'clock Eastern Time. Apparently they thought they were on at 11 o'clock Central Time. Apparently he'll be on ASAP. Let me just do a little bit of a background on Henry Jersiewicz. Is the CEO of Gibson Guitar. And, Gibson Guitar is a classic American success story. The company was founded, I think, back in the 1890s when Orville Gibson began making mandolins in Kalamazoo, Michigan. But the company, of course, achieved iconic status for its guitars, its acoustic guitars, and its electric guitars. And the company is in the news now because the Department of Justice raided Gibson Guitars, shut them down, although I guess they're back in operation. We'll get all the details. But the reason that they raided them was because the Department of Justice accused them of violating Indian law. Not, American Indians, but Indian law in India. Now, why the U.S. Department of Justice would even care about Indian law? I mean, if a company isn't violating any U.S. laws, why should we care if they're violating Indian law? Especially since India doesn't care. India is not coming after Gibson for violating their laws. I don't think they're going after Gibson suppliers for shipping their laws. Apparently, the law in India states that any wood exported from India needs to be finished in India. That's the law. Now, Gibson is importing unfinished wood, and American workers are finishing it, I guess, here in America. Now, what the Department of Justice would have against that is beyond me, because this company is here in America, creating jobs in America rather than in India, And the government is threatening, to fine them, to shut them down, to put them out of business, to destroy these jobs. Why? Because they're importing the wood that they use to make their guitars in America. They're importing that wood from India. What difference does it make? Now, of course, the speculation is that, maybe it's U.S. lumber companies that would prefer that Gibson use American lumber rather than Indian lumber. Now, I'm sure there's a reason, and we'll find out when my guest comes on, why it is. I mean, there obviously is some benefit to the wood that is being imported from India, that if they used the wood grown in America, that maybe the guitars wouldn't sound as well. They wouldn't have the same acoustic quality, and therefore maybe they wouldn't sell as well. Maybe if they had to use American wood, maybe the whole guitar company would collapse, because maybe the guitars that they were making would not be as good as the ones they're making now using the wood from India. And so maybe by importing wood from India, they're actually saving jobs. They're creating jobs. And if they had to use the U.S. wood, they would not. I don't know. Apparently, we still haven't gotten him on the line. So let me see if I can take some calls. Maybe we'll have him on at later segments. So I'm going to go to Tim, who's on hold in Chicago. Tim, welcome to the show.
Oh, thanks. You said you never met anyone that said they're overpaid. I'm overpaid. I have a government job, so.
Oh, well, okay. Well, you work for the government. Okay, well, you're all overpaid there.
Yeah, I'm just one of the few that can.
But I'm talking about in the private sector.
Yeah,
but most government workers probably wouldn't admit it. At least you admit it.
Yeah, I do. I got a wife and kids, so what are you going to do? I'm stuck. But my question is. The influences on your dad, I know he influenced you, and I never got that growing up at all. But where did he learn his stuff from? Specifically, what individuals?
Well, he learned it on his own. I mean, my dad, my dad grew up in a Democratic family. His father was very much pro-Roosevelt. Even though his father was an employer, he employed a few people. He was a carpenter, small business owner, but he was very much in Roosevelt's camp. And my father grew up a Roosevelt a Democrat, and he went through high school as a Democrat. I think it wasn't until maybe his college years or after that he began questioning the liberal doctrines that he grew up with. And he, on his own, he discovered the writings of the Austrians and on his own. And so he had a much more difficult version of a journey to get to the truth than I did. I had my father to show me the way. My father didn't have any of that. My father had to come to these realizations completely on his own. And so I have a lot of respect for that. And there are other people, too. There are other people that think just like I do, but that grew up in very liberal households. And so, I have a lot of respect for that. I didn't have to overcome that obstacle. I had my father from an early age letting me know what was right, giving me an education that I was able to build on my own. So he gave me a very good foundation rather than the roadblock. My father, at least from an economic sense, my grandfather was a great man and probably gave my father a lot of other positive things in growing up, but he obviously didn't give him a good understanding of economics. So in that respect, my father had to unlearn what he learned from his dad about economics and politics. And so I didn't have that challenge or obstacle to overcome.
Yeah, I discovered this Walter Block from von Mises. He's pretty interesting. But okay, thanks for your time, Peter.
Yeah, thanks for calling. Apparently, I'm just looking on the news that's going across right now. I think that the Department of Justice, it looks like they're blocking or they're going to block the merger between AT&T and T-Mobile. And again, under this whole pretense of antitrust, I don't even think we should have antitrust. I think that we should abolish it completely. I think it has hurt the U.S. economy because what it really does is that it benefits inefficient competitors. I mean, we don't want competition for the sake of competitors. We want it to get low prices and high quality. And if a company can achieve a monopoly status by delivering the lowest price at the highest quality, why interfere with that? Why force competition, even if it means higher prices and less quality? But to think that if AT&T and T-Mobile would emerge, that somehow the competitive landscape for cellular services would be diminished, I think is ridiculous. The government blocked the merger of a couple of video companies, Blockbuster and I forget the other one. Maybe I'll research it over the break and I'll talk about it when we get back. We're running into a commercial. Stick around. We got more of the Peter Schiff Show coming up. We'll be right. Welcome back, everybody. It's Peter Schiff here. And before the break, I started talking about the Federal Trade Commission blocking the merger between AT&T and T-Mobile. AT&T shares now down $1.50, a little over 5%, and it reminded me of the FTC saving the consumer from a monopoly in the video rental market. About 6 years ago, Blockbuster Video, you remember those guys, they're bankrupt now anyway, but Blockbuster Video tried to buy Hollywood Video, and the Federal Trade Commission prevented that from happening because they said it would create a monopoly in video rentals. I mean, could you believe that? Meanwhile, none of their customers were complaining about the merger. Who complained? It was one of their competitors, a company called, where is it here? Movie Gallery Incorporated. And you know what happened? After the FTC busted up the deal, right, shares of Hollywood Video plunged, and then Movie Gallery Inc. bought them. And they merged with the blessing of the FTC, but it was a lower deal. But ultimately, I think all the companies went bankrupt. Netflix came along and wiped up the floor with these guys. But here, we wasted all this time and money trying to break up a theoretical monopoly that has disappeared based on competition from companies that didn't even exist when the FTC was doing this case. I mean, the whole thing is absurd. And maybe had they not broke up the merger, maybe Blockbuster and Hollywood Video would have been able to stay together. Maybe they would have been able to find a better way to compete with a Netflix. Maybe they would have had the resources to reinvent themselves, and maybe the company would have still been around. But maybe because the government got in the way, the Justice Department, the FTC got in the way, and now the companies that they were accusing of being a monopoly don't even exist anymore. They've gone bankrupt. That's how much of a monopoly they weren't. But even if you go back to even the original antitrust cases, go back to Alcoa Aluminum, go back to Standard Oil. These are the big cases that started, with the Clayton Act and the Sherman Act. The reason that the court was breaking up these companies was because they were so competitive. That the court said that they were providing products that were so cheap to the consumer that no other company can compete. And because their products were so inexpensive, we had to break them up. We had to give other people a chance because they were so competitive. They were so good at anticipating a consumer demand and organizing their factors of production. They were able to provide services and products to their customers that were so low and that were so good and the quality was so high that no one could compete. Well, what's wrong with that? I mean, the whole reason to be against the monopoly is because the monopolist is providing prices that are too high. Why would you want to bust up a company because its prices are too low? The whole thing is absurd. And the last thing we want is government regulators looking over business merger propositions. If two companies want to merge, if it reduces their costs and it makes them more competitive, let them merge. And the thing is, if they try to get a monopoly position and then they try to abuse it by raising prices and monopoly pricing, they won't be a monopoly for long because somebody else is going to come in and compete away those monopoly profits. The irony is, The only time you actually get monopolies that are monopoly pricing is when the government sanctions them. When you get the government license that gives you a monopoly and then government regulations prohibit competition, then you can have a monopoly. So government creates monopolies. It doesn't protect us from them. It is responsible for them. So if we simply got government out of the way, we wouldn't have to worry about monopolies, and if any monopolies developed, it would be because the prices were so low and the services were so good that nobody else could compete. And who cares? Because the bottom line, it's not about competition, or competition is not about how many competitors you have. It's not about competition for the sake of competition. It's about competition to bring price down and quality up. And it doesn't matter how many competitors are in the landscape. As long as we get the lowest price at the best quality, doesn't matter how many companies are required to produce it. Anyway, let me go to the phones. I guess we're still trying to get our guest on the line. So on hold from San Diego is John. John, welcome to the show.
Thank you, Peter. Appreciate your knowledge, and I want to thank you for your show every day. I enjoy listening to it. I'm one of those people that are unemployed, and if I'm not careful, it could easily come up on being 1 year. I've been licensed securities for 20 years as an external wholesaler in the Southern California market, and my company, a major securities insurance company, recently shut down our division. So I am out trying to create a job, and I'm wanting to know, we're looking at manufacturing a fiberglass product that's going to be sold.
But you were a wholesaler of what? What did you wholesale?
Securities insurance products.
Yeah.
To a major in Southern California.
Yeah, I don't know. Maybe you should give my office in Southern California a call. I know we're trying to expand our wholesaling division for our managed products, so you never know. But anyway.
I'd love to do that. In fact, your investment philosophy is the only one I believe in anymore.
Yeah, I mean, we are trying to expand that area. So.
Is that Europac?
Europac Asset Management, yeah, in Newport Beach.
Okay. I'll call them.
Although we are going to be relocating them out to Singapore, but we still might need wholesalers here in the U.S. But
I'd love to live in Singapore.
But anyway,
yeah. So I'm trying to create a business, and I'm wondering why would I want to do it in the U.S. and where would I go learn about the advantages and disadvantages of setting up an offshore company?
Yeah, I mean, look, I'm doing that right now. I set up Euro Pacific International, Europac Bank, Euro Pacific Bank are both offshore companies, and there are a lot of advantages to doing that. There, particularly in my case, I get away from a lot of regulations that otherwise would make me so uncompetitive relative to other companies, and you do reduce your tax burden. So, you dramatically lower the cost of doing business if you do business outside of the United States. So for a lot of people, it makes a lot of sense. But what should bother you as an American is, why does our government do this? Why does the government make it so that it's more advantageous for somebody to set up a business outside of America, to invest capital outside of America, to hire people outside of America? Why does the government make or pursue policies that tilt the playing field in that way, so that people who would ordinarily, it would be a lot more convenient for me to have established or to have continued to do the business I'm doing offshore. It would be a lot easier for me. It would make my life a lot simpler if I could do it in the United States. So I would prefer to do everything I'm doing offshore here in America, all else being equal. The reason I'm doing things abroad that I would rather do here is because of regulation and taxes that make it too cumbersome, too expensive, and too frustrating to do it in America. And so, yeah, I would suggest, if you're thinking about doing a new business, that you really look into doing the business in another country, look into the rules and regulations and taxes there, because you might find out that you can be far more successful and make a lot more money if you employ your efforts and your capital outside the United States rather than inside the United States.
So where do you start? Where do you do that with? It's an international attorney, or
well, I mean, it's not really a great discussion to have on the internet, but you got to decide. Look over different jurisdictions and things that you want to do, what the type of people you have to hire. there's a lot that's going to go into where you decide to locate a business, and so I can't really get into it now. But I mean, I wish you luck on your research. Anyway, hey, we got a break coming up. We will be right back following these messages. Not really sure if we're going to get our guest or not, but we'll see. Maybe we'll come back with Henry Druskowitz, or maybe we'll have to hold him off until another day. Anyway, you're listening to the Peter Schiff Show here on Schiff. This is Peter Schiff here at SchiffRadio.com, and during the break, I'm reading through some of the information on this the FTC filing lawsuit to block the merger between AT&T and T-Mobile, and now, of course, AT&T is going to have to divert a lot of resources into a lengthy, expensive legal battle. These are resources that might better have been used developing its company, making capital investments, hiring people. Instead, it's going to have to now use these resources for an expensive legal battle with the U.S. government. And if it loses this battle, not only will it have wasted all that money, but apparently, I'm reading through the fine print, if this deal falls through, AT&T has to pay a penalty to Deutsche Telekom of $3 billion in cash. So that's $3 billion that AT&T might have had to invest and create jobs in America, but now it's going to have to send that money to Germany because the deal fell through. And, of course, what is this going to do? I mean, it's going to combine, this deal would combine the number 1 and the number 4. It says a carrier. So I guess T-Mobile is 4, or is AT&T? No, AT&T is 2, right? It says it's gonna combine the number 2 and number 4 to create number 1, but they're still going to compete with the Verizon, which would then be number 2, and Sprint, that would be number 3, and who knows what other ways that they that cell phones. The cell carriers compete. I mean, you've got other different ways that people make telephone calls now through the internet, or using things like Skype, or through Apple iChat, or different things like that. There's all sorts of ways, and then of course you got all the landlines. But there's plenty of competition. But talk about throwing a monkey wrench into a business process. Who knows what's going to happen as a result of this? But again, we are in a recession. The economy is struggling. The last thing we want is the government to put more burdens on an overburdened economy, and that is exactly what we're doing. Anyway, so let me go back to the phones. On hold is Matt calling from Cleveland, Ohio. Matt, you're on the show.
Hi, Peter. Thanks for taking my call. A couple of things. First, regarding the Gibson Guitars case, if you do get the guy online today, you might want to ask him, because my impression was that the Indian government has certified that the exports were legal. It's the American government interpreting Indian law different from Indian officials and enforcing their raid.
He's not going to be. He's going to be on now tomorrow instead of today because of the mix-up. We couldn't get him on. But yeah, but what I want to ask him is, why is the Justice Department enforcing Indian law anyway? I mean, when did they get deputized by the Indian government? I mean, so is our Justice Department going to enforce the laws of every country in the world? I mean, how many countries are there? How would we even know what all the laws are? I mean, so is why don't they start enforcing Sharia law? The whole thing is nonsense. I mean, so the Department of Justice is going to break down my door one day and say, "Hey, you're violating Cambodian law. You're violating Swahili law." I mean, how am I even expected to know as an American citizen? Am I supposed to know the laws of every country in the world? And is the government going to hold me responsible if I somehow break the law of some other country? I mean, this is absurd.
Yeah, absolutely. Apparently, there's some provision in a recent law called the Lacey Act that requires American businesses to comply with foreign import-export laws. And to my understanding, I haven't researched it, so I don't know for sure. That's just my understanding of the justification that the Justice Department is using. Obviously, he'll have a lot more details. But to your point, yeah, exactly. Why are they enforcing this, and not even without a complaint from the foreign government, right? There's no complaint from the Indian government. And second of all, the Indian government apparently has certified that what they're doing is illegal. So it's the Justice Department interpreting.
But what I don't understand is, if we're violating Indian law, if Gibson is violating Indian law by importing the wood, isn't the Indian exporter violating the law by exporting it? And then why wouldn't the Indian government simply go after their own exporter who's in their own jurisdiction?
If that's the case, absolutely. But like I said, my understanding, the Indian government has certified that what Gibson is doing is okay. They've got the paperwork and they've submitted it to the U.S. courts and so far.
Yeah, so I'd be interesting to ask then what then is the justification for going after them? They don't care. They're just going to interpret Indian law however they want, and they're just going to enforce it here in the United States. And for what purpose? I mean, why should they care? Why does it bother the Justice Department if Gibson imports wood? What do they care? Who are they hurting?
Right, exactly. Yeah, it's really bizarre. Really bizarre. Different topic. Have you seen, recently there was an article, I think the guy's name was David Lee, he's out of Toronto. He wrote an article about the national economy in Canada and how it's doing much better than most of the other Western nations, and he kind of tracks the Canadian policies over the past maybe 15 years, the federal government, or just national government policies. And basically, they're very, free market oriented. They've taken pains to, reduce the debt. They've actually had surpluses.
The Canadian success story back in the 1990s, Canada had a real problem. I mean, Canada actually had their sovereign debt downgraded as well. But rather than, killing the messenger like we did, the Canadians actually, took that to heart and really made steps to turn around their fiscal situation. And, of course, back then, the Canadian dollar was worth 60-something cents, and now it's worth $1.02 or $1.03. So they turned it around by adopting the exact opposite strategy that we have. They actually cut government spending, balanced the budget. They did the opposite of the stimulus approach that we have now, and what Canada did back then is paying dividends now. So the reason that the Canadian economy is doing well is because they did the exact opposite of what we're doing when confronted with a similar, only bigger problem.
Exactly. It's interesting. It comes down to economic models. Just a very simple economic model that I believe in, and I think that my understanding is, you seem to advocate, is that the government is basically a detriment. You know what I mean? It's a consumer. It takes money from the private sector. It consumes it, and generally it doesn't do so very efficiently. And so
that's where, it was Jefferson's quote: "The government that governs best governs least." I know it's amazing that, our founding fathers were very learned men. We should be heeding their advice. They laid out a very good blueprint for this country if we only would have continued to follow it. But yes, government is a necessary evil. Why would our founding fathers call government an evil? I mean, they knew we needed one, but they knew that government potentially could do a lot of harm to an economy. That's why we had a constitution to limit the power of government, to keep that evil in check. But, of course, now the Constitution has pretty much been rendered meaningless by Supreme Courts that have ignored it under the guise of interpreting it. And now, it's not just no longer a necessary evil. I believe it's an intolerable one.
Right. And the opposing model, of course, the Keynesian model, is that government can do some good by being, a consumer. But the Canadian example, as well as others, right? The U.S. after World War II. I mean, it was when World War II ended, the U.S. government literally slashed spending, and at the same time slashed taxes, right? According to the Keynesian model, that should destroy the economy. But
we didn't slash them enough, unfortunately. But yes, we cut spending dramatically, and contrary to Keynesian revisionist history. The reason we got out of the Depression is because government spending collapsed after the war. It wasn't the increase in government spending during the war that got us out of the Depression. It was a huge reduction in government spending after the war that produced the boom.
Right, and Ron Paul gave an interview recently in which he mentioned just gave some anecdotal personal support about that. He says during the war, people may have had money, but they had nothing to buy. There was no actual wealth, even though you had currency.
Oh yeah, I made that point all the time that stateside during the war, I mean, everything was rationed. I mean, there was nothing around, there was nothing to buy. All of the resources were being utilized to make things for soldiers. And of course, the soldiers weren't living a good life either. They were fighting. They were in the deserts. They were they were dying. I mean, we didn't have a good standard of living either on the home front or in the theaters during the war. I mean, the war didn't help the economy, other than the fact that maybe we defeated the Nazis, and ultimately, had we not done that, maybe it would have the Nazis would have expanded, and so maybe fighting the war was necessary. But it would have been better had Adolf Hitler never come to power. It would have been better if if World War II never happened. And of course, one of the, that's a whole other story, but probably if you wanted to go back and figure out the main reason why we had World War II was because America entered the First World War. If we would have kept our nose out of the First World War, which I think we should have, had we not entered the First World War, then I don't think Germany would have been defeated the way it was. I think there would have been a much fairer peace negotiated between the Axis and the Allies, and we wouldn't have had the Treaty of Versailles. We wouldn't have had such an onerous penalty on Germany. They wouldn't have had the hyperinflation. That wouldn't have created the environment that gave rise to the Nazi Party and Adolf Hitler. So you never know how interventionism can come back and bite you. But clearly, it would have been better if the Second World War had not been necessary, had Hitler never risen to power. But you'd hear the Keynesians think, well, hey, if that had never happened, we'd still be in the Depression. They think, hey, it's a good thing that we had the Second World War. Anyway, don't go away. We'll be back. We got another segment coming up here on the Peter Schiff Show. We'll take some more calls. Welcome back, everybody. This is Peter Schiff here at SchiffRadio.com, and we're at the last segment of the show. And, we've got a pretty big rally going on in precious metals as the stock market is surrendering some of its early morning gains. When we started the show, we were up about 120 in the Dow. The Dow has lost better than half those gains, up just under 60 points. And as money has come out of stocks, it's gone right back into gold. Gold was down $25 this morning. It is now only down about $2. In fact, at one point during the break, it was back to unchanged. I'm just looking at the ETF GLD. The gold stocks are in positive territory. The HUI index, the HUI, is now less than 1% from making a new all-time record high. And as I said yesterday, I think this is a very positive development in the gold market. I think the fact that the gold stocks are now going to make a new high before the metal itself makes a new high, I think that's very bullish because that's something we haven't seen thus far. It's been the gold making new highs and the gold stocks just been dragging along for the ride. But if we actually can see gold stocks leading gold, that, I think, is a positive development because it shows that investor expectations are changing, that people are going from being skeptical of the gold rally to believing in the gold rally. Now, that does not signify that we're at the end of a bubble because people are starting to believe. The end of the bubble is when everybody believes. But the fact that some people might actually start to recognize that gold is not going to collapse, that the fear is starting to ebb from the market, and greed is starting to come in, this could be the beginning of the next leg of this gold bull market, which I think could be even bigger and more profitable than the earlier leg. And in fact, I keep hearing yesterday on, they were doing a big special on CNBC on gold. They were talking about it all day. And there were a lot of people talking about that it was a bubble because so many people are talking about gold, that more people are talking about it, reporters are talking about it. Yeah, there's no question that a lot of people in finance are talking about gold. I don't know how many, mainstream Americans are talking about gold, but to have a bubble, it's not about talking about it. It's actually about buying it. And the vast majority of people on television who are talking about gold haven't bought any of it. You know, how can you have a bubble if no one's actually bought the commodity that's supposedly in a bubble? And in fact, if you look at a chart of gold, and I'm looking at the chart right now, I'm looking at this ETF. If you look at the monthly chart, I don't see any kind of blow off top. I don't know what Dennis Gartman was talking about a parabolic or blow off move. In fact, the only thing that you see, if you look at a monthly chart of gold, all you see is we just recently, in this last month, in the month of August, we broke through the channel that we were following, the trading channel. We broke above the upper band of that channel. That's bullish. That's a breakout. It's not a parabolic move. We have just broken through overhead resistance, and now we're on a new trajectory higher. How anybody who claims to be a technician can look at these positive technical indicators and say that this is indicating a top? It's the exact opposite. It indicates a breakout. It indicates that we're going into a whole new level as far as I'm concerned. Can we pull back slightly? Oh, of course. But gold's recent move up, far from indicating some kind of blow-off to a speculative mania, simply shows me that we're going into a new leg of the bull market, that we've taken out some of the overhead resistance in a very positive way, and this is being validated now by the action in the gold stocks, which now seem to be grabbing the baton and now will be leading the parade instead of following it, and that is a bullish thing. Now, ultimately, at the end of this process, when all skepticism goes away, when even the staunchest gold critic embraces the market, at some point, may there be a bubble? Of course. And in fact, most bull markets kind of end with a speculative frenzy, and I would expect that this one will do that some point into the distant future. I have no idea how long it will be before gold takes on that characteristic. But I get people email me all the time, when is the gold bubble going to burst? When's it going to burst? And I give the same answer. There's no bubble. There's nothing to burst. You have to let a bubble form before it can burst. And again, I want to caution people, too, if you're buying gold, we just put out our brand new special report, Europac Precious Metals, on the pitfalls and the things that you need to watch out for, all the gold scams that are out there and ways that people are getting ripped off. So if you've bought any gold, if you're planning on buying physical gold, before you buy another ounce, you've got to read this special report. It's free. You go to goldscams.com. Scams plural, goldscams.com. Download it for free. It's 15 pages, and then you'll be in a much better position to shop around and make sure you're getting the best gold at the right price. Anyway, let me take a few more calls. On hold is Dane, calling from Montreal, Canada. Dane, welcome to the show.
Hey, Peter, can you hear me?
Yes, I can.
Yeah, I have some savings in Canadian dollar, and I want to diversify in other currencies. So what currency should I buy, and what the allocation would be?
You know, we've got a brand new special report coming out that I did in conjunction with Axel Merck, our 5 favorite currencies for the next 5 years. And you can hear the rationale. But just to give a few of the currencies that I like, I mean, I think you should be diversifying into some Asian currencies, RMB, the Singapore dollar. I like the Scandinavian currencies, and you can look at the Norwegian krona. You can look at the Swedish krona, the Swiss franc. Despite the fact that they're trying to undermine it, I still like the Swiss franc. Also look at other resource currencies. Look at the Aussie dollar. Look at the New Zealand dollar. There are currencies, and some of the emerging market currencies, some of the Eastern European, the Polish zloty. There's some of the currencies down in Brazil, the real. There are other currencies that you can own. The key is that you don't have to settle for just one currency. You can create a basket. You can diversify your currency exposure the same way you would diversify your stock exposure. I mean, most people, if they want to go into the stock market, they don't just buy one stock. They don't make an all-or-nothing bet on just one company. They diversify. So you don't have to make an all-or-nothing bet on one currency. But that's exactly what most people do. The vast majority of people that live in the United States, all their money is in U.S. dollars. Probably the same thing holds true in Canada. The vast majority of Canadians probably only have one currency, and that's the Canadian dollar. And I think that's a mistake. I think people have to understand the risks inherent in owning a fiat currency. Now, if money was backed by gold, well, that wouldn't matter. You wouldn't have to diversify because no matter what currency you own, you'd still have gold. But the fact that none of the currencies are backed by anything real, that they're all just fiat, they can all just be printed into oblivion, means that people who are saving have to be vigilant and have to be diversified. Doesn't mean you own all the currencies, because you can obviously pick the best of a rotten bunch and pick the currencies that are the least bad, which is basically what we do. And, of course, you want to own real money, too, which is gold bullion. Anyway, hey, thanks for the call. Thanks, everybody, for listening. We got a lot of people that are still on hold. I apologize for that. But call back tomorrow, and hopefully our guest, Henry Jarowski of Gibson Guitar, will be on time. We won't have the confusion. I am still looking forward to that interview, so make sure and tune in tomorrow for another 2 hours of the Peter Schiff Show on SchiffRadio.com, the gold standard in talk radio.